What's up, YouTube, and welcome back to another episode of Finance and Freedom. My name is Todd, and today we're diving into something that's got everyone in the crypto world talking. Bitcoin just formed a death cross. Now, is this the beginning of the bear market for Bitcoin, or is this just another fake out before a big rally? Let's get into it. Now, most people hear about the death cross and they instantly assume that it's bearish and that Bitcoin's about to crash. But here's the thing. The last 3 times that exact signal appeared, Bitcoin was actually near the bottom, not the top. Each time it marked the end of a correction, and what followed were some of the biggest rallies we've ever seen. So, in this video, we're going to take a look at what the death cross actually means, why it's probably a bullish setup this time around, and how things like Fed rate cuts, the end of quantitative tightening, and even SoFi integrating Bitcoin could all be setting the stage for a huge move higher. All right, so first things first, what exactly is the death cross? It's when Bitcoin's 50-day moving average crosses below its 20-day moving average. That's it. But over the years, people have given it this dramatic name, the death cross, as it's some kind of guaranteed market collapse. In reality, it's more like a rear view mirror than a crystal ball. By the time that cross happens, short-term prices have already been weak for weeks or even months. It doesn't predict the downturn, it actually confirms that the correction has already happened. And interestingly enough, in Bitcoin's case, that confirmation has historically lined up right at the bottom of those corrections, the point where smart money quietly starts buying again. So when everyone else sees death, the people who've studied the charts know it often signals a rebirth of momentum. Let's go back through the data over the past several years because the pattern is pretty undeniable. In January 2019, after the brutal 2018 bear market, Bitcoin was sitting around $3,500 and the death cross flashed again. And what happened? That was the exact bottom before a rally up to 14,000. Same thing in March 2020, right after the COVID crash. When Bitcoin dropped to under $5,000, another death cross appeared. And that was the last major signal before Bitcoin went on its epic run to $64,000 the following year. In June 2021, Bitcoin had just dropped from $64,000 down to $30,000 range. The death cross triggered, panic hit, social media, and people were screaming the sky is falling and the bull market is over. What happened next? I think you know. Bitcoin bottomed right there, consolidated for a few weeks, and then launched to a new all-time high of $69,000 just months later. That's 3 for 3. Now, these are not the 3 that I was actually talking about. There were actually 3 within the last year, 3 death crosses, and each time it signaled the bottom. So every single time the death cross came at or near the bottom, and what followed was massive upside. So instead of it actually being a death sentence, it's been more like a buy signal in disguise, the calm before the storm that shakes out the weak hands before the next big move up. All right, let's zoom out a little bit because this isn't just about charts, it's about the bigger picture. The macro environment right now looks eerily similar to what we've seen before every major Bitcoin rally. First, let's talk about the Federal Reserve policy. After nearly 2 years of aggressive rate hikes, the Fed has finally pivoted and has started doing rate cuts. Inflation has cooled and they've openly started signaling that rate cuts have started and are going to keep on coming. And when rates go down, liquidity goes up. Money starts flowing out of cash and back into risk-on assets like stocks, tech, and especially cryptocurrency. Historically, Bitcoin loves that shift. If you overlay Bitcoin's price chart with the Fed funds rate since 2015, you'll notice something interesting. Bitcoin tends to bottom near the end of rate hike cycles and rally when rate cuts begin. It's like clockwork. Now add that to the fact that quantitative tightening, the Fed's effort to drain liquidity, is also slowing down. When QT ends, liquidity returns to the system and cue another tailwind. And this time, there's more infrastructure supporting Bitcoin than ever before. SoFi, an actual US bank, is integrating Bitcoin, Ethereum, and other cryptocurrencies directly into its customer accounts. This is a huge deal, not just because it expands access to everyone, but because it signals mainstream acceptance. So this is just the first bank of many that are going to start incorporating cryptocurrency into their platforms. Combine that with the spot Bitcoin ETFs that launched earlier this year, which brought billions of dollars in inflows from institutions, and you've got an environment that's more mature than any prior cycle. This isn't the Wild West of 2017 anymore. Bitcoin is becoming mainstream. Bitcoin is slowly merging with the traditional finance world, and it's happening at the exact same time the macro environment is turning favorable again. So technically speaking, yes, Bitcoin has a death cross, but look deeper at the structure that is being all set up. The 200-day moving average is still sloping upward, meaning the long-term trend is still intact. This kind of cross, when it happens during a broader uptrend, usually signals a short-term cool down, not a full trend reversal. We're also seeing on-chain metrics that confirm people are accumulating. Exchange balances are dropping, which means people are moving their Bitcoin off of the exchanges and into cold storage. Now, that's not what traders do when they're planning on selling anytime soon. That's what they do when they plan on holding for the long term. Long-term holders are adding to their positions. Now, the short-term holders and the traders and speculators, they're the ones panicking and selling. The ones that are leveraging Bitcoin, they're all panicking. That's exactly what we see before every big recovery. Even Ethereum, Solana, and a few of the top altcoins are showing the same pattern: long-term accumulation during price weakness. Now, historically, when Bitcoin finds its footing, the rest of the market follows. So the technicals and the fundamentals are all aligning here, and that's across all of the cryptocurrencies. Short-term weakness, long-term strength. That's what you want to see before a big move, and that's what we're seeing right now. So where do we go from here? Well, here's what I'm keeping my eye on. The $100,000 support zone, it's been at that key level multiple times now, and if it continues to hold, it kind of sets the stage for a strong base of support heading into the next run. And yes, I know Bitcoin has ducked under 100,000 a couple times recently, but it stayed there, very briefly, and quickly bounced back up above 100,000. Next, let's talk about any ETF inflows. Any uptick in these numbers would confirm even more institutional buying than we already have. Now remember, these ETFs now hold a significant portion of Bitcoin's total circulating supply. Even though we haven't seen a ton of retail investing yet, the big companies and even countries just keep on buying more and more. Now let's talk about the rate cuts. Historically, Bitcoin doesn't wait for the rate cuts. It starts moving before that happens. Markets always try to price in the future. Now, at this point, Bitcoin seems to be pretty unfazed by the rate cuts. This is likely due to the government shutdown and other market turmoil and just overall bearish market sentiment. As this liquidity begins to flood the market over the next coming weeks, I think we're going to see a huge uptick in Bitcoin and the stock market as a whole. Now, once all three of these pillars align, that's strong support, that's fresh inflows, and that's easing policy, that's a recipe for a boom unlike we've ever seen before. We haven't seen this type of institutional inflow or government policy that supports cryptocurrency in the past. And so that's what makes this whole 4-year cycle kind of a moot point. So don't let the name Death Cross fool you. For Bitcoin, it's often been the start of something huge, not the end. With more potential rate cuts around the corner, quantitative tightening ending, and banks like SoFi adopting cryptocurrency, the foundation for the next bull cycle might already be forming beneath the surface. Now, just to be clear, I don't have a crystal ball. It's very possible that we're at the beginning of the bear market and we could go down to $60,000, but I don't think that's likely. There are too many things that are falling into place that make me think that we are about to see a huge inflow into cryptocurrency. Now, I don't know about you guys, but even though Bitcoin has been chopping sideways for the last little bit and it's been kind of annoying, I'm excited to see what's coming next. If you found this video helpful, make sure to hit that like and subscribe button down below for more content like this. Thanks for watching Finance and Freedom. I'll see you in the next one.